We have the first meeting of the RBA board tomorrow, their first since their historic out of cycle interest rate cut. What do you think will come out of tomorrow's meeting? Are we looking at 0% interest rates?
No, we're not, Annalise, and they've already told us that basically 0.25 of 1% is what they refer to as their terminal rate. There will be no more cuts to interest rates. It's more about whether or not there's other programs that they could bring into their overall system. It's unlikely to happen tomorrow either. I think if you got anything, it would be more around the idea of them laying the groundwork for what that could look like. There is suggestions and growing suggestions at that they may be going down the lines of what we saw from the Federal Reserve during the GFC and possibly, and I say that deliberately, possibly looking at buying corporate bonds. But after what they did in their emergency meeting, as you alluded to in March, it's unlikely tomorrow is going to be the date. I think they're already suggesting they're on emergency footing, as they refer to it, wartime footing, in fact, that if they need to have an emergency meeting sometime in April, they will. It's more, again, evaluating what they've done, cutting rates, and then those raft of measures that they introduced at their emergency meeting, probably evaluating that. And then, as I said, any possibility of changes to policy will probably be outlaid. And if it's anything, it may be the idea of corporate bond buying.
And we're looking at our first data drops this week that will show the true picture of the impact of coronavirus. What are we really keeping an eye on this week?
Yeah, there's lots out. I mean, it's a shortened week also because it's obviously Good Friday on Friday, but it's again, there's a few things to look at. Today we do get job advert numbers. We know where the jobs department already is. It's already, in the doldrums, so that's probably not the one to look at. You have the trade balance tomorrow just before the RBA. It's actually going to be slightly better than I think people expect because the value is going to be slightly stronger and China's slowdown wasn't as hard as what some were forecasting. But the one to look is going to be on Wednesday, and that's the home loans data. You'll get home loans and also investment loans. Now, we know it's going to decline and going to decline quite a rapid way. The reason I highlight that is that last week the discussion was around what the RBNZ and also the Bank of England did around banning their banks from paying out dividends. This is going to be the first sign to show what normal operations have changed from our banks here and whether or not the dividend cycle that we have for our banks is going to change and whether or not they too are going to see APRA, our regulator for banks, come down hard on them. And it's going to be quite steep in terms of what happened in March, even though the first 2 weeks were still relatively strong. It's the data that's really going to highlight whether or not all of this work that the government and the RBA is putting in is actually basically being stopped at the final part because consumers just don't want leverage at this point in the cycle, and a home loan is that.
And just quickly, a look at the markets. It seems like things are levelling out a bit. Is this going to give us false hope, though? Is it going to get worse before it gets better?
Unfortunately, I personally think it's the latter. I think at the moment, the one to watch is what happens in the US. We keep hearing from the White House that they are bracing for serious pain, and that's, the way to explain it is you are likely to see a very, very big increase in death rates in the US, and that, I think, is going to filter through to global markets because the US is the leading indicator there, and that's why I personally believe that, yes, although we have settled down, we're probably likely to see another leg lower before we get out of this. And until the US peaks with their coronavirus issue, we're probably not through anywhere near the end of this current downward cycle.